other venues create pools with crvUSD to earn those fees. Maybe they take some of these fees.
We are seeing the influx of stablecoins coming into the market. Welcome back to The Roll Up.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it. All right, guys, welcome back to this episode 3 of Stabled Up. I am here with Michael Egorov, the former co-founder, or still co-founder of Curve, current founder of 𝗶𝗵𝗶𝗵𝗵.
I would say founder of Curve and
the founder of DeFi, along with 𝗵𝗵𝗵𝗃𝗃, and others. Today's Stabled Up show is, of course, brought to you by Frax, powered by Frax, one of the leading stablecoin providers in all of crypto, with Frax still their chain, FraxNet coming up for the stablecoin wars, as well as the general work that they've been doing in the White House. Shout out to Frax. Shout out to Michael. Thanks for being here, Michael. I gotta ask you, I gotta start off this conversation. Man, what has the last 48 hours been like? We are oversubscribed by a matter of like 50 times for what you guys were trying to raise for. It's been an insane week. What is your reflections on the amount of demand that you guys saw for the yield basis launch?
yeah, well, that looks quite insane. I wouldn't say it reflects into too much. How to say? It's really surprising to see, I would say, right? But yeah, it doesn't reflect into too much stress on my side. I think it was a little bit more stressful to actually get the first deposits going, because I'm very glad that we started small, because there were all sorts of things which didn't go exactly as I thought. So deposits started half an hour later than anticipated. But yeah, so far so good. And we looked at what's going on and created some vote at Curve to make sure that deposits will, I would say, go smoother when we raise the cap for them again. And actually, this is kind of something which is, I would say, where it probably should be a little bit more stressful than watching the Legion thing. But Legion is really like, well, how to say? I think we had some sort of nonsense season in crypto, mostly with meme coins and stuff. Not to say, well, I wouldn't say that meme coins are always useless, but I think most in that season were, right? So, well, maybe about 100% of them. And I think people kind of got a little bit of tired from pure speculation, so
Definitely.
They wanted to see something real. And I think we are seeing real projects coming up. So yield basis is definitely one of them.
Yeah, I mean, I think there is demand for that fundamental type of investing, if you will, or at least understanding that there's some real backing behind the project, and I think that's what you guys have. It's been a crazy week. 𝗵𝗶𝗃𝗃 announced his $200 million raise with this new tokenomics thing. You guys, Michael, have came out with this huge kind of oversubscribed round. Talk to us about the Kraken Legion yield basis collab, right? So in about 1 hour, we're going live on Kraken for the first Kraken launch.
Well, I think it was possible to guess, because when we just opened first deposits, the initial cap for deposits was very small, like 1 million essentially. Well, 1 million per pool, so it's like 3 millions. And that was filled in, I don't know, half a minute when, at least when it appeared in UI, and we had someone figuring out how to deposit before it appeared in UI. So, and I think we see pretty much the same in Legion, but with like, well, over a little bit longer time.
Yeah. So
But
how did you come to make the partnership with Kraken? Like, you know,
right.
they had this new launch and they chose you guys. What? How
Yeah,
did you guys pull
so
that off?
yeah, so we didn't actually originally plan to do it, but we thought, well, maybe, well, Kraken is a very legitimate brand, of course, and um, and they are essentially launching this Legion thing, so it would be probably interesting to be the first project in their like in the sequence of projects they will be launching. So maybe that creates a good awareness essentially. And
Yeah, I think it did.
and I think, yeah, I think it works.
Yeah. All right. Well, Michael, I don't want to get too deep into just the actual sale part of things because I think that's just a small part of what you guys are doing and looking to accomplish. Um, Maybe what people would like to hear about is, you know, kind of the overarching picture of what yield basis is. And then I think the main question is just like, why do you need a token? You know, like, okay, we're doing this big sale. Maybe you could, you know, walk us through the yield basis, you know, strategy and vision here,
Right.
and then loop us into what people, when people are investing or, you know, allocating to this, taking their own, not financial advice here, taking their own risk to, you know, invest. What is the value that they're going to get from this yield basis token? You know, how does it fit into this grander picture? Maybe let's start with the updated vision. It's been a couple of months since we last spoke, and you know, how does the token tie in?
Right. Yeah, so yield basis earns yield from essentially Bitcoin and maybe other cryptocurrencies volatility by removing impermanent loss in AMM. So it actually will be able to earn yield from fees without being affected to the price fluctuations. So that's great. Of course, if you loan crypto. And in principle, it can work without a token, in principle. And I even had this idea before I started it. What if I make just a traditional company which runs essentially an AMM and makes money on it, and that's about all it, right? So that, of course, could work. But I think if, I realized that this thing should benefit Curve a lot as well, right? And I guess it would be really good to grow it pretty quickly. And if you want to grow it quickly, you want a token, and you want, of course, this token to be connected to all the token economics and value capturing mechanisms. And I think tokens are very good for bootstrapping communities, but you have to have economics actually working to have long-term success of any token, I think.
Of course.
So, and also, I did want to check new ideas about how to build sustainable token economics. So I think maybe many people are familiar with veTokenomics, which was, I think, I created it for Curve, and then it was adopted by many more projects. So it's, I think, good examples today would be Pendle, Aerodrome, and so on. So they use veTokenomics in different forms. So it's not kind of all the same flavor, but idea is the same. When you vote, your voting power is proportional not only to tokens, but also to time. And your earning power, like the power to earn fees from the system is also proportional to not just token amount you locked, but also time before unlock, essentially. And having this time component appears to be very, very good, because like in Curve, I saw that the revenues which are earned by people who lock tokens are essentially, well, not revenues, I would say, the speed with which tokens are removed from circulating supply is 3 times faster than buyback and burn, right? Well, and in principle, buyback would have the same speed as buyback and burn, but buyback and burn is strictly better for everyone than just buyback, because if someone buys tokens back, then they are able to sell them later. And if they buy back and burn, they are not able to sell them later. And here it's lock. So people, in order to participate in the system and earn fees, people lock the token. And it appears that they lock tokens on average with the speed 3 times faster than buyback and burn, and they don't tend to unlock. They extend the locks to continue this process, and that's interesting. In principle, sometime like after many years, maybe decades, the speed of lock-in tokens, I think, should become equal to speed of buyback and burn, maybe. But I think initially it removes tokens from circulation faster. But I don't know. It's just a hypothesis. Nobody really studied that deeply because it didn't exist. And and I just decided to do some modifications to this model. I think one of the most important modifications is not about the lock-in itself, but about token distribution. So it's applicable to any protocol which distributes tokens for participation. And basically, one thing I like, the biggest small thing I did here is I've split between users who want to earn tokens and users who want to earn a real yield. So you can choose what to earn, tokens or real yield, but not both at the same time. It makes contracts a little bit more complicated, but it makes it a little bit easier for users, because like if you want real yield, you don't really have to care about tokens. When you integrate that, you can use it as collateral and so on, right? And you, like, today, many people farm protocols and dump tokens because they want to earn essentially real yield. Here they don't have to do it. They just choose to earn real yield, and market forces will make the yields in tokens and real yield probably equal, right? So well, at least that's what I think. We'll see how it works, but that's the idea, and I think it can be applied well outside yield basis. So more governance experiments.
Hibachi, provable, trade perps with speed and security, earn rewards. Visit 𝗵𝗵𝗵𝗵𝗃𝗍, trading on fire. The future runs on intelligence, creativity, engineering, health, money, productivity. AI promised utopia, but delivered only hype, black box models, and zero accountability. With tons of tools claiming to be the best, how do you know what's real? Introducing 𝗵𝗵𝗶𝗰𝗵. Top models ranked by transparent reputation from researchers, users, and developers. Test AI skills, curate favorites, and compete to see what works. Don't guess what's good, recall it. I just got some quick thoughts from people in the community. Yes, Jay Rana, that Etherscan link is correct. There is $182 million of USDC in the contract, still with some yield basis ERC20 in there, so that is in there. Ash King says, I didn't see anyone who got allocation. I mean,
wait.
Michael,
I think yield basis ERC20s are not yet out.
So sorry, there's a okay, so maybe guys, just be careful if you're seeing any yield basis tokens out there.
True.
definitely just be careful. Don't
I've
click any
seen a
links.
few, and they are not
Okay.
real.
Okay, so just guys, be careful out there. Yeah, Kraken and Legion. Yeah, it's somebody's, Maggie's saying that that it was hard to navigate some of the websites because it was down. There was so much traffic, guys.
Yeah, like I think people were so interested that it actually crashed.
Yeah, I
So,
saw Legion put out an announcement. So sorry about that, Maggie. And then Ash King, I didn't see anyone who got an allocation. I mean, there was $5 million available for 200 million of demand. So, hard decisions were made. Anyway, Michael, back to you. When we're thinking about yield basis in this context of what I'm considering the stablecoin super cycle, right? Where we are seeing the influx of stablecoins coming into the market. Treasury Secretary Bessent has alluded to wanting to get to $3 trillion of stablecoins by 2028 on chain. Yesterday, Stripe came out and said that they're launching a new issuance platform, open issuance, to allow anyone, with some sort of credibility and credentials to launch stablecoins. How do you view yield basis and the product around Bitcoin and kind of solving impermanent loss in the lens of the stablecoin adoption that's happening? How do these two kind of worlds collide, and how do you see yield basis being a beneficiary of the stablecoin adoption that's happening?
Right. Well, I would say a beneficiary of stablecoin adoption is probably Curve, right? And of course, more stablecoins is better. But also, curiously enough, if you have more stablecoins, then you can, I would say, make crvUSD more stable. You diversify what crvUSD stabilizes against, and it will have more routes to be exchanged to. And stablecoin crvUSD powers yield basis. Well, in principle, it could be anything, but I think crvUSD is probably the most stable stablecoin, which is still not the centralized stablecoin, but decentralized, and it's very convenient to power yield basis, and Curve will, of course, benefit from that. So I think that benefits of this stablecoin adoption are probably more about Curve than about yield basis. But who knows? One thing, well, you can call it conspiracy theory, right? So when you have more stablecoins and more TVL sitting in stablecoins, I don't know, trillions, right? Sitting in stablecoins on chain and backed by T-bills or whatever, right? That's well, that's kind of a little bit like a representative of inflation, or maybe for some people it will look this way. So the more stable coins you have, the more you have the urge to hedge away from US dollar to crypto, maybe to Bitcoin, maybe to gold, maybe to Ethereum, who knows? But it's possible that yield basis is applicable to any of these assets. So anyway, I think stablecoin adoption means that we might have some volatility in crypto prices, and that's good.
Yeah. Yeah. And so, I mean, I think for people who just want to get an understanding, basically, yield basis has effectively created a strategy such that backtesting the Bitcoin volatility, assuming dampened volatility going forward, the strategy should work to basically create this increased yield opportunity for Bitcoin users who deposit into yield basis without suffering the impermanent loss that a lot of DeFi struggles with. Can you just give us the 90-second how this works? How is, if Bitcoin's volatility goes lower for the next 5 years, how does yield basis capitalize the most compared to anything else on the
Right.
market?
Well, of course, it all depends on the type of Bitcoin volatility which will happen. But if it simply goes down, then yield basis will have to reparameterize the pools and make them denser, right? So make them suitable for more stable assets. Well, you can say that pools, they concentrate liquidity, right? And I think the first concentrated liquidity pools which appeared on the market were Curve in 2020, right? So it's kind of the same algorithm, but you have this dense liquidity moving around automatically, right? If asset is less volatile, then maybe you have less revenues, but you can afford to concentrate liquidity denser. And when you concentrate it denser, then you take bigger, I don't know, you increase capital efficiency essentially, right? So you cannot have high capital efficiency if asset is highly volatile. So, and if volatility of the asset goes down, then you have to increase capital efficiency. And this is just done by a parameter. And you cannot afford to have high capital efficiency when the market is too volatile, right? So I would say that we just have to recalibrate everything by looking at how the market proceeds. And we have a solid models to do it.
Yeah, awesome. And Michael, when the actual platform token goes live and the product goes live, is the main pool going to be a Bitcoin USD like
Oh,
pool?
the actual pools are live already.
Okay, the pools are live. Sorry.
Right,
Okay.
and it's well, the pool serves swaps between three types of Bitcoin essentially and crvUSD, but users deposit just the Bitcoin part.
Okay, and so the impermanent loss that we're going to be avoiding is going to be coming from the Bitcoin or any form of the Bitcoin, you know, wrapped, etc., and then paired with crvUSD, basically.
Yes.
Okay. And so this is a big play for you to expand the crvUSD demand.
Yes.
Obviously.
Exactly.
And then that's going to help CRV.
Yeah. And by the way, this runs a new type of crypto pools on Curve, which are not only useful for yield basis and for Bitcoin, they are very useful for exchanging essentially national currencies of different denomination, like stablecoins in USD versus stablecoins in Euro, something like that. It's exactly the same code of pools. Maybe you don't really have to run the full yield basis thing, but you can just run crypto pools, and it's currently happening on Curve to essentially set up Curve as the prime foreign exchange venue on chain. And so it's pretty much, well, yield basis is some interesting tech on top of interesting tech.
Yeah.
And
but I see it coming together where it's like
Yeah.
yield basis provides value to crvUSD, gets more liquidity, more
Yes.
depth, more demand
Absolutely.
just to own it. And then crvUSD allows the CRV flywheel to really actually take off.
Right. Yeah, we've been discussing with some people online how this benefits Curve.
Yeah.
Because
Tell us about it.
one component which is fairly interesting is that when you swap between Bitcoin and USD, you have crvUSD normally somewhere on the way, right? So maybe you want to exchange WBTC to USDT, but you have WBTC to crvUSD pool. So what happens is WBTC to crvUSD to USDT, and you have this crvUSD to USDT way earning fees for Curve. So the concern was, what if other venues create pools with crvUSD to earn those fees? But then the question is, well, maybe they take some of these fees, but then they create liquidity for crvUSD and they make a supply sink for crvUSD. So maybe they have crvUSD adoption spreading this way, or maybe centralized exchanges will list crvUSD because they would see volumes because of yield basis working essentially. So it's an interesting way how that will turn out.
So crvUSD total supply outstanding right now, or market cap, is about 120.
Yeah, something like that.
5 million.
Yeah, I think something like that.
So this is your plan to get it to a billion.
I guess.
Or billions.
Well, I mean, it's a good question where the limit is, right?
Yes,
well,
like
maybe
where do you go from here? Like, what does yield basis take you for crvUSD?
Right. Well, I mean, a billion is quite imaginable, but I think if you want to calculate absolute maximum, it is determined by what will dampen volatility of Bitcoin. And I think that would be somewhere around tens of billions.
The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions, fast, reliable, everywhere. Start swapping today, only on Relay. Blockchain shortcuts, templates, and widgets launch without friction. For builders, by builders. Visit enso.build.
Do you think yield basis is going to bring tens of billions of stablecoin demand for crvUSD?
I think that's possible.
Wow.
But
In what
I
time frame?
wouldn't say for sure because like who
I'm
knows?
gonna have to start a prediction market for it.
Yeah. No one can predict the future. I wouldn't play on prediction markets. I can give predictions, but I will not bet on them.
Okay. Michael, talk to us about how you chose to do the vesting schedule for the pre-sale participants, as well as the just the last thing that I wanted to ask on the token side. You know, it's fully unlocked on at TGE for all the Legion participants as well as Kraken launch. Why did you choose that? And then what does
Why
that
unlocked?
enable?
Yes. So that's actually a great question. Back when Curve launched, the initial supply of CRV was 0, right? And well, price is essentially coming from demand divided by supply. When you have division by 0, you have infinite price. So that's what happened with CRV initially. And after you have infinite price starts going down. Nobody likes price going down. So you have to have initial supply. And you need to give it to someone. So, and who to give it is, of course, there is this question, but there should be some liquid supply, and that is what it is.
Cool.
At least part of it.
Yeah, makes sense. And then, okay, so what is the timeline here to that? Like, is this like an October launch? Like, because in order to get the pools really to where you want them to be, the token is a necessary part.
I know.
Are the pools are the pools ready? Like, are you confident in the pools? Like,
they are, but I'm testing and checking things all the time.
Okay.
So that's why we started with smaller cap, and also crvDAO participants really wanted that way, and I'm glad that they did. So now I think we are ready to expand the caps a little bit, but after that we probably will need to expand the caps again. But anyway, I'm checking all sorts of plausible issues which nobody could have thought of all the time, so that to ensure that everything is safe.
Okay.
But yeah, safety first. That's essentially why you cannot really have I don't know, have trillion cap in day
Yeah.
one, right?
Yeah. Yeah. All right. So kind of, I don't mean to go all over the place here, but I just wanted to ask those two token questions before I, got out of here. Just quick couple things from the fans. Hey, Michael, how will you make sure people keep locking 𝗰𝗶𝗴𝗵 for the long term once the early rewards slow down? That's from 𝗵𝗶𝗵𝗵.base.eth.
Oh, actually, people who lock 𝗵𝗶𝗴𝗵, they don't get rewards themselves. They get fees earned by YB, right? And fees are obviously bigger when you have bigger TVL sitting in YB, but they are real fees, like real yield. So 𝗵𝗶𝗴𝗵 get a part from what's going to real yield.
Okay. And so so you'll make sure people keep locking YB even once the early rewards slow down because
Yeah,
they're going to
but
get the
it's
real
not
yield.
like rewards are not going to 𝗵𝗶𝗴𝗵. That's the thing.
Okay, right.
What goes to 𝗵𝗶𝗴𝗵 is real fees.
Got
And
it.
real fees depend on what market is doing, not what rewards are doing.
Got it. And then Maggie's asking, is Convex or CVX accumulating YB?
I think they could. I
Okay.
mean, they have all the opportunities to do it.
Okay. Broccoli says, thank you for the answer. So Michael, back to the crvUSD stablecoin component. I think this was a really, really interesting kind of thought experiment and process here. So let's say we get billions of dollars of demand for crvUSD. What
Right.
does that do to the curve flywheel? Like, how does that enable a more positive curve ecosystem? And then how does that value then go back to yield basis as a result of it
Oh.
starting with yield basis? It goes to curve and
Oh,
then
no,
comes
no.
back.
Yield basis does get value just from fees which are earned in
Correct.
BTC to crvUSD pools. So yield basis already gets this part. And it needs to share the value with curve, obviously. There are two ways to share the value. Well, several ways, but one way is there is some allocation of YB tokens, which is going with the speed proportional to inflation to curve, and curve decides where they go. The best thing, I think, is to put them to incentives of stablecoin pools which swap with crvUSD to promote crvUSD even further. When crvUSD will be promoted, I think it's like supply sync going up, so we'll have more loans in crvUSD, and Curve will earn even more over there. And yeah, so essentially you have yield basis powering Curve, and yeah, I already explained with the crvUSD trading part. So I think it's like things going hand in hand.
Yeah. Yeah. Okay, cool. And when you're thinking about the actual 𝗵𝗵 token, people have a little bit of PTSD from CRV and all of the copycats that came after with the VE model. I know you guys shortened the total period down from the initial time lock, I believe, or maybe it is still the same 4-year maximum.
It's still the same for you.
Okay. So
but
I
there are
misspoke.
there are a few differences.
Yeah, maybe you could explain those.
Yeah, there are a few technical differences. You can actually, if you have max locked position, you can transfer it around as a whole, right? So, which is more convenient when you want to move it to some, I don't know, multi-sig wallet. So we don't disallow smart contracts to own it. That's one thing. Another thing, I think in Curve, we have this mechanism of boosts where owning locked tokens gives you ability to earn more tokens for your liquidity, right? At the expense of those who don't have locked tokens. But actually, looking over long term, it looks like that leads to consolidation of 𝗵𝗵 voting power in a few actors who are really good actors, though. But it's a little bit not super not super diverse, I would say. So, and there will be, and this boost mechanism is also fairly complicated. So I think it was better to go without it, and that's what I did here. So it's, but nevertheless, all the wrappers around VE tokens, they still do make sense, right? When you buy a wrapper, whether it can vote or not, I don't know. You still like you exchange the time, the lock-in time, into the probability of the wrapper depegging, because you have some limited liquidity on the sell side, so you cannot really exit the wrapper en masse, and you just exchange one risk with another risk, so time risk with potential price risk, right? And well, that's probably fair, and that still achieves, even if the wrapper can vote, you still can achieve the original purpose of veTokenomics, which is to prevent governance attacks, like long-term governance attacks.
Yep. All right, Michael, we got a couple questions from the chat. One guy, Ajax, says no email yet. Ajax, I'm sorry, it was 40x oversubscribed on Legion. Hopefully you can get in the first come, first serve sale. Justin says very bluntly, Michael, when is TGE? I think we kind of spoke on this. Maybe you could just quickly rehash the roadmap plan.
Yeah, I will. I cannot tell the exact dates yet, but really we need to have pools working a little bit with tiny bit of liquidity like now, and with a little bit more liquidity, and after that I think it's reasonable to do the TGE.
Yeah,
but
okay.
I cannot tell the dates exactly yet.
Got it. Cool. I'll let you know if we get any more. I just got a couple last things for you, Michael. What is left for so we get to the token launch, we get the pools up. Then after the pools are incentivized with the token, and you've got this kind of dual optionality system for people that want real yield or YB, what is left from you guys after that on the development side? Like, what do you need to do to go from that place to the next place?
One thing is that we are definitely probably the most knowledgeable ones currently in terms of running our simulations and being able to figure the parameters of the pools. As I said before, the parameters depend on volatility, and volatility changes over a long time. So we will have to change parameters over some time, I guess. And when we add new assets, we need to calculate new parameters for the new assets. Obviously, Ethereum is more volatile than Bitcoin, and BNB is more volatile than Ethereum. And which assets are good to add in yield basis, and what should the liquidity concentration be, what should the fees be, is something one needs to calculate. Another thing, if we do some research and come up with mechanism which actually earns more, then it's good to implement it. Remember, the liquidity is 2x leveraged over there. So if having some, I don't know, some dynamic fee which is better than what we did makes us plus 1% in APR, in YB that would turn into plus 2% in APR. So you amplify all the improvements by factor of 2, and that's not small. So this is, well, if we create in future, we can create new pools for the same assets which earn more, because we, let's say, come up with some mechanism to do this more efficiently. So that's, I think, yeah, I think that's where we
Yep.
we will still need to oversee it. Oh, of course. Well, I mean, anyone can, right? But yeah, I'm just not even very much aware of anyone else doing simulations of trading activity which actually matches the reality within I don't know, within few percent. Like, I mean, few percent precision. So let's say if you have simulation showing I don't know, 3.4% APR, and you have the real pool doing 3.3 or 3.5%, that's probably good, right? And I don't think I've seen this kind of precision anywhere else outside the simulations we do.
Michael, last thing for you. Any alpha on which assets you're thinking about next? You mentioned some assets.
I think that probably the most obvious one would be Ethereum itself. Right. I don't know, maybe Ethereum, maybe Ether, maybe staked Ether. I need to think. But Ethereum is definitely a good one. What else? We will see. I always try to look at gold, right? I don't know. I don't know if it's possible. It's just
Tether gold. I mean, it could work. It could
I
work.
mean, it just sounds fascinating. I want to have this brick of gold which becomes bigger and bigger on my shelf, right?
Michael, thank you for your time. I know it's busy over there. I know you got 20 minutes or so until the sale on Kraken. I'm going to let you go. I'm sure the team is hands down, heads down right now. Appreciate you jumping on. And yeah, it was a great session, man.
Sounds good.
Alrighty, Michael. Speak soon, buddy. Bye. Thank you.